Tesla, as well as your big tech names, are in the red today. This is somewhat to be expected heading into Wednesday's CPI. CPI is going to be such a big catalyst. To get some profit taking before that makes a lot of sense. Now, what we're actually seeing on the day for Tesla is incredible. A lot of news coming out, some good, some bad, some things you need to know. We're going to get into here in this video. Not to mention that the broad markets seeing a downgrade from Citi, suggesting the S&P 500 could fall almost 10% from here. So sure, it's creating a little fear in the markets today. But don't worry, we have everything you need to know and much more here in this video. Your one-stop shop for everything happening with Tesla as well as the markets today. If you like to make money and you want to make more of it, if you want to reach financial freedom as quickly as possible and stay up to date every single day with what's happening, hit the like button as well as subscribe to the channel. Now let's not waste your time. That is your most precious asset. Let's go ahead and get straight into it. Tesla stock is down over 2% today. And a big reason for this is insider selling. CFO Zachary Kirkhorn sold a total of 3,750 shares at $278.70. The insider received about $1.05 million. I get it. It's not a big deal. You and I, we don't care. But the bears and the shorts, they're going to use anything they can to try to drive down the price of Tesla stock. They are losing over $100 million every dollar Tesla rises from here. They're going to use whatever they can get their hands on. After all, bad news has been scarce lately. Jefferies analyst Philip Hochis just raised his price target today on Tesla stock from $185 per share all the way up to $265 per share. He also raised his 2023 full year earnings outlook. He raised that by 12 cents. There's still a massive disparity here because he estimates that full year EPS will be around $2.83 per share, whereas the Wall Street Journal currently expects Tesla's 2023 full year EPS to come in at $3.40 per share. Most analysts are way under where Tesla's numbers will actually come in, and that's where you probably get a big rally upon earnings. Hochis also expects second quarter revenue to come in at $24.7 billion, up 6% sequentially and 46% higher than a year ago. He also expects $400 million in zero-emission vehicle credit and $675 million in leasing, roughly in line with the consensus estimate of $24.53 billion. Hochis forecasts a gross auto margin of 18.6%, 40 basis points below the first quarter. He sees some mitigating impacts coming from easing commodity cost, something we've talked about a lot here on this channel, especially with the price of lithium falling recently, fixed cost coverage, and IRA support to battery cost. Hochis sees profit margins bottoming out in the second quarter after early 2023 price cuts. So this is the trough that people are talking about, where Tesla's margins fell and now they're bottoming out and they can start to recover from here. This is a positive for Tesla. Markets are forward looking. So as long as we get an indication that margins aren't going to get worse from here, well, the outlook for Tesla instantly gets a lot better. In other news, Kentucky's new law mandates Tesla's charging technology to secure federal funding. The state is requiring EV charging companies to include Tesla's plug if they want to partake in the state's program to electrify highways using federal dollars. This is because of the recent partnerships that we have seen with Ford, General Motors, Volvo, Polestar, Rivian, so on and so forth. These developments might highlight the increasing recognition and adoption of Tesla's NACS, promising to streamline the charging process for a broader range of electric vehicles across North America. Kentucky is poised to become the first state to mandate the use of Tesla's charging technology. This follows earlier indications from both Texas and Washington of similar intentions. Tesla's Model 3 is the best-selling used EV so far this year, followed by the Nissan Leaf, according to Carvana. If you can't buy one new, you might as well buy one used. Tesla, in every field that they are in, new, used vehicles, it doesn't matter. Tesla is ranking the highest out of all EV makers. This continues to show Tesla's dominance is far superior than anyone else. Now, we got the delivery numbers for Tesla already, 466,140 deliveries, but we don't get that broken down by geographic. Well, we're getting the final delivery numbers out of China for the month of June, and it looks like local deliveries hit 74,212 in June. Exports reached 19,468 units, and that is a big role that the Shanghai plant does have, is exporting vehicles on a global scale. Tesla's domestic deliveries in June actually saw a 4.78% decline from about 78,000 units that were sold in the same month last year. The result showed an improvement of almost 75% compared to May. However, for context, May saw 42,508 Teslas delivered locally. So your quarter-over-quarter growth is insane for Tesla. Things are ramping up in China. That's the bottom line. It looks like Tesla is laying off a bunch of its Shanghai Gigafactory workers weeks after Elon Musk visited and praised their hard work. Now, the layoffs are actually happening in the battery production department. That makes up less than 1,000 workers out of the factory's 20,000 staff. So we don't have a clear number here. Probably a couple hundred workers, as Tesla is a very efficient business. They figure out how many people they need. They cut people when they don't need them. They cut the unperformers. And that's a positive thing for Tesla, believe it or not. Even as it does sound harsh that people lose their jobs, this is a positive if you are a shareholder of Tesla, and it's going to help that margin picture improve from here. Last but not least, Twitter's traffic is, quote, tanking as Meta's Threads hits 100 million users. Now, I've heard a lot of people talk about this, but essentially Threads is like a knockoff Twitter. And if you sign up to Threads, that's what it is. Just call it how we see it. It's a knockoff Twitter. Typically, the knockoff does not get better traction than the original. Twitter is not going away. Twitter's not going to lose because Threads is now around. People are going to sign up for Threads. They're going to stop using that. They're going to start using Twitter again. But this could be having a negative role to play on Tesla's stock today, as some people might be looking at this and saying, hey, if Twitter now has this huge competitor, maybe Elon would have to sell more stock to invest more money into Twitter. I don't think that's necessarily the first thing that Elon is going to do, but it is a logical concern that some investors are having here today, but not something I would necessarily concern yourselves with. In more broad market news, Citi downgrades US stocks and sees the S&P 500 pulling back 9% to 4,000. If you track the SPY, that would be the SPY dropping to 400. That would be a sharp decline. They go on to cite the expectations are too rich for stocks, especially heading into earnings season. They go on to say that the odds of a recession are still there, and this should keep the multiples tame, and we're probably not going to get as good bottom line earnings as what a lot of people are hoping for to justify these valuations. They actually expect the SPY to close at about $400 by the end of this year. This would mean downside of about 10%. Another reason why markets are quite fearful today. But it might not be the only reason why markets are fearful or the biggest reason why markets are fearful today. According to Fitch Ratings, the American banking landscape is on the cusp of a seismic shift. Expect more pain to come. Rising interest rates, losses on commercial real estate, and heightened regulatory scrutiny will pressure regional and mid-sized banks, leading to a wave of mergers, sources told CNBC. 50% of the country's banks will likely be swallowed by competitors in the next decade, according to Fitch analyst Chris Wolf. Quote, some of these banks will survive by being the buyer rather than the target, said incoming Lazard CEO Peter Orszag. We could see over time fewer, larger regionals. So fears of the banking crisis being even worse. Now, we've already seen firms including Zions and KeyCorp that have warned about their sinking revenues. Problem is, we get bank earnings on Friday. On Friday, we are expecting to hear from JP Morgan, Citi, Wells Fargo, State Street, and BlackRock. If they have negative things to tell us about their businesses, well, that could mean a lot more instability to the banks. And the last time you've seen a banking crisis in this degree was 2008. And that puts a bad taste in investors' mouths, to say the least. Fed Bostic says today that inflation is too high and it's not sustainable. Recession is also not his baseline outlook. And he says right now policy is clearly in restrictive territory. Fed can be patient. The economy is starting to slow down with job growth slowing down and inflation coming down, among other signs. Fed still is time to let restrictiveness play out, but would not be comfortable if inflation stalls or expectations rise. Right now, expectations are pretty well anchored. This caused a slight rally in the markets and with Tesla, but things are starting to come back down. Tesla stock today is down about 2%, and if we take a look at some of the technical factors, there's some bullish, some bearish. It looks like we still have that bull flag pattern, which can lead to some upside. I've said this before, but historically bull flags give you about 18% upside from the confirmation of a bull flag, which was on Friday. That would put Tesla stock at about $320 per share. You have also seen a golden cross recently where the 50 and the 100-day moving averages have crossed above the 200-day moving average. But some bearish technicals would include Tesla not holding support at 270. You're currently at $268 per share under that 270 level. Next level of support is going to be 265, in which you did bounce off of that almost perfectly here today. So that is a positive factor, although 270 was a big one I wanted to see Tesla stock hold. The RSI is also starting to fall. This can be a bullish thing or a bearish thing. The fact the RSI is falling, that is obviously bearish. But relative to how overbought you were, the RSI coming down can lead to more room for that upside move when it does come. It means essentially people aren't going to be shorting Tesla as much. The trading algorithms aren't going to try to short the stock back down just because the RSI is overbought. The algorithms use the RSI a lot in their trading. Now, the MACD is probably the biggest bearish indicator that I am seeing here today. Recently, you've been very bullish on the MACD. And if you look at this in the grand scope of things for Tesla, you could see these humps to the upside are bullish kind of rallies, right? It's when momentum to the upside takes over. You've seen quite a few in the last couple of years. 1, 2, 3, 4, 5 now. And you've seen a couple down moves. Well, you're still very much in bullish territory overall, but this yellow line, it's called the CCC line, breaking above the signal line is bullish. Breaking under the blue line is bearish. What you've seen recently is a break under this blue line, which was bearish. And then you've seen a break almost above. It was slightly above for intraday trading back here on July 5th as well as July 6th. But today, you are seeing the yellow line back under the blue line, which is a very near-term bad sign. As far as the option activity, that tells a different story, at least for options that expire this Friday. The volume today for July 14th's expiration is 55.5% calls and 44.5% puts. So you are seeing more calls being placed on Tesla today, which is a bullish sign, especially given the stock is down 2%. It looks like people are going out and adding some of that bullish exposure, as it probably makes sense to do so on any downside move with Tesla if what I expect from earnings comes to reality, meaning the margin expectations are far too low for Tesla, and Tesla could just give us some very good news. We'll have to wait and see. Overall, the open interest for this Friday on the call side is almost 53%, and on the put side is about 47%. So still seeing more calls relative to puts overall on this week's expiration. The most active strikes for this Friday is by far the 280 call, where you have 60,000 for volume today, currently seeing open interest of 19,000. The 290 call seeing volume of 29,000 with open interest of 18,000, and the $300 call seeing volume today of 27,000 versus open interest of 23,000. The dollar amount that is currently sold short in Tesla stock is about $25 billion. This 2% down move, as well as what we seen last week with another about 2% but down move, has dropped the total amount that is sold short in Tesla by about $1 billion. But $25 billion currently being sold short in Tesla is still up 50% in the last 3 months, and short sellers are sitting on massive losses. Now, if we get better than expected earnings, better margins specifically than what we're expecting, the options as well as the short positions could fuel a gamma squeeze and or a short squeeze, or both at the same time, because relative to big tech, Tesla stock is cheap. It's cheaper than any other big tech name on a PEG ratio basis, factoring in EPS growth, than Amazon. Amazon is the only big tech name that is cheaper than Tesla. On another note, home prices are hitting new highs again as high rates put the squeeze on supply. Home prices hit a record high in May, according to Black Knight, and a lot of people don't expect inventory to come online until interest rates are down to about 5%, because a lot of people don't want to trade their 2.5% to 4% mortgage rate for a 7% mortgage rate today. So don't expect the pressures on real estate to ease up anytime soon unless we go through an economic downturn. Although this can be negative for inflation, I don't think this is going to outweigh the positives that we have seen recently and the positives driving inflation down. On another note, the 10-year and the 2-year bond yields are falling today. The 10-year bond yield is down almost 5 basis points, sitting at a flat 4%, and the 2-year bond yield is sitting at 4.86%, down almost 7 basis points today. This is leading to an expansion and broadening out of our markets. Your small and mid-cap stocks, the stocks you and I have been buying the dip that never stopped dipping, over the last 2 years are finally starting to recover. Stocks such as Roku, Square, PayPal, your stocks that have gotten beaten down, your DraftKings, your Snapchat, all of these stocks that have not done so well in the past year and a half, 2 years, well, they are starting to do well. This is actually a very positive sign for your bull market. You want to see the broad markets participate. You don't want to see the Magnificent Seven carrying the entire weight of the market. So today is actually a very healthy move for the markets, although your big tech names are down. As far as tomorrow in the markets, Tuesday, July 11th, at 2 o'clock in the morning tonight, when a lot of us are sleeping, you're going to get the UK unemployment rate. You're expecting that to hold steady at 3.8%. Last month's rating was 3.8%. If this goes higher, then that could definitely sour the mood everywhere, because you're already hearing Europe recession, this and that, and Germany's already in a recession. I really don't have to preach this to you. I think you guys already understand the importance of the global macro environment, as we are very much interconnected, as globalization has been happening for 50, 100 years now. It's important what happens in Europe, and what happens in Europe affects our markets. Now, besides that, you're going to get Fed Bullard that speaks tomorrow morning at 9 a.m. Eastern Standard Time. He is one of the most hawkish members, if not the most hawkish member on the Fed board. Now, he is not a voting member, so his comments are not as impactful as we've seen in 2022. But if he says anything that is more aggressive than what we have heard recently, well, that could be a problem, so watch for that. At 11:30 in the morning tomorrow as well, Eastern Standard Time, you're going to get a 52-week bond auction, as well as a 3-year bond auction coming out at 1 p.m. These bond auctions are important. The Treasury, well, they ran their TGA account down to essentially nothing as we were getting close to that X date and the default date. Well, now the Treasury has to go out and sell massive amounts of bonds, about $1.5 trillion worth of bonds from now until the end of the year. They've already raised almost $250-300 billion, but there is still over $1 trillion left to be raised in just the next couple of months until the end of this year. So it's going to pull liquidity out of the markets. Depending how much demand we see for these bond auctions, that's going to dictate the yields, and that's where you could get some wild gyrations in the bond market, and that can also affect the markets. Overall, tomorrow, I think it's a pretty good possibility markets are also red, especially your big tech names. And that also goes for stocks such as Tesla, as you do have inflation data coming out Wednesday, and it makes sense to trim some profits in some of your big tech names. And it makes sense to go long in some of your small and mid cap stocks if you are playing for better than expected CPI. Now, specifically with Tesla in regards to CPI, if you think CPI is going to come in better than expectations, meaning inflation is falling faster than what the markets are currently expecting, well, the 3 areas that you'd want to be in: small and mid cap stocks, which you're seeing those outperform today, EVs, but you could lump that in with automakers, and housing. Those 3 subsectors of the markets are what would move the most based on CPI. So I do expect Wednesday to be a very big day for Tesla, for other EV makers, for your small and mid cap stocks. Whether it's good or bad, I expect it to be a very good move. I think Tesla could rally 5 to 7% if inflation comes in better than what we're expecting. And just so everyone knows, the reason those 3 subsectors will do better is because if inflation comes in not as strong as we expect, the Fed's not going to keep rates as high for as long. They can cut rates a lot sooner, and that just allows for more economic activity in those areas. It allows for higher valuations and less potential bankruptcies in small and mid-cap stocks. It creates more potential demand for EVs, for automobiles, as 90% or more of vehicles are financed, right? Pretty straightforward, as well as housing. Obviously, same thing for automakers. Rates coming down is positive for all 3 of those areas. For the actual inflation numbers, Wednesday, we are expecting those at 8:30 in the morning Eastern Standard Time. You're expecting inflation to basically fall off a cliff in all of these areas, especially your headline year-over-year numbers. You're expecting that to fall to 3.1%. Last month's reading was 4%. If you get anything around 3% or even slightly under 3%, if this number came out at 2.9%, Tesla's gonna rocket. The markets are going to rocket. Now, your inflation rate month over month, your headline is expected to reaccelerate to 0.3%, largely driven by the price of energy, as well as some certain sectors of food have definitely went up a little bit in the last month, but I think this is far too aggressive for a month over month reading as far as what the markets are expecting. Core inflation rate year over year, expecting that to fall to 5% from 5.3% last month, and you're expecting core inflation rate month over month to fall to 0.3% from last month's rating of 0.4%. So, ladies and gentlemen, that is going to do it for this video. That is everything you need to know about the markets today, as well as a specific focus on Tesla stock and even what we can expect for tomorrow. Again, don't be surprised if there is more red in some of your big tech names and your small and mid cap stocks do outperform. But the only thing that really matters this week is inflation. At least from now until Wednesday, you should be trading, if you're trading, based on how you think inflation is going to come out. That's going to give us the big move this week. So that is going to do it for this video. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If I missed something, let me know about it. If you guys have inputs, let me know about it. If you guys also want to come trade with me live in real time, every time I make a trade, I post it in that community. Check it out. Link down below in the pinned comment for the Patreon. Sign up. I will send you a link. Come join us. Come make some sweet, sweet money with us. If you guys also want to get yourself some free money, essentially deposit $100 or $1, whatever amount you want into Webull. Get yourself 15 free stocks. Throw a couple free stocks my way. Help support the channel, as well as check out the link in the description for merch if you guys want to rock your Tesla enthusiasm wherever you shall go. Thank you for watching again. Enjoy the rest of your day, and I will see you in the next one.